Korala, a CEO and founder of KAL Software. Aravinda has been so gracious. He's on the screen here, and he's joining us from Scotland today for this great opportunity to hear some of his wisdoms on fintech, on bank transformation, technology innovation, the ATM marketplace. So, Aravinda, how are you doing this evening? How are you feeling today?
I'm feeling good. Thanks for the invitation.
Wonderful, wonderful. Well, let's dig right in here. So we've got we're going to spend the vast majority of our time here. We're going to talk about how this works and today's goals, and then we're going to spend the majority of the time on a really, I'm really excited about the topics we're going to go over today with Aravinda. We're going to dig right in, right at a couple of minutes. We're going to get right after it. So, and then very importantly, we're going to get into some questions. Already a lot of questions have come in from the audience that have been sent in, and we're going to read some of those off, but encourage folks as we're going to ask questions as we go. So we're going to go 45 minutes in the main flow of our conversation, and then we'll have a formal period of 15 minutes of Q&A. But please, as we go, the great thing about this format is that it can be, as opposed to, let's say, if we're at a physical conference and you're sitting in the audience here, you can't raise your hand in the middle of the talk. Here you can. So you can utilize the GoToWebinar toolbar to ask questions, to raise your hand, to suggest topics, and please do so. This is certainly a participatory sport, so the more interactivity that we all have, the conversation will be better for everyone. And my experience is that you, as an audience member, will get more out of it. So, with that intro, that kind of what are our goals today? What are we doing here? So we have a kind of the first one is around this concept of the shorthand fintech, financial technology, commercial banking wisdoms and prognostication. So Aravinda, his career, and we're going to spend time talking about his founding and the growth of KAL, certainly around this idea of the bank branch, the consumer banking experience, and technology transformations, how those experiences are being impacted. And this is a topic that Aravinda is arguably, he's a modest guy, but he's arguably the world's expert on, the world's leading thinker on this topic of the ATM and its role in the delivery of financial transactions. And then, there's a lot of buzz around consumer smartphones, around mobile applications, and how those are going to play into the whole experience of modern banking. So those are topics that are related. So we have a lot of commercial banking and finance executives on the webinar. So we're going to get somewhat granular on those topics. I find them extraordinarily interesting in terms of the world of modern money and global transactions. So we're going to really dig in. I've had many conversations with Aravinda, and he's extremely thoughtful and has a real base of experience as a technologist, as a businessman in these arenas. And then ideas for bank IT departments as they deal with this transformation and disruption. And then goal B is very equally important, which is these more general technology, entrepreneurship, and innovation wisdom. So Aravinda is a guy that's really done it. I mean, tremendous respect for what he's done with KAL, which will, for those that aren't familiar with the story of KAL, we're going to share it here. Has really built a global technology company from scratch and from a lifetime of high-intensity, high-integrity effort. So with that introduction, digging right in to an introduction of Aravinda. So Aravinda started KAL in 1989, and the company is now the world's largest independent supplier of ATM software, with installations in more than 80 countries and over 300,000 automated teller machines worldwide. Clients of KAL include Citibank, ING, Unicredit, and China Construction Bank. I'm so impressed with Aravinda, and I've gotten to know members of his team as well. Aravinda has traveled the world in building this company. He's averaged more than 40 weeks per year of international travel, and he's visited with banks and financial industry technology providers around the globe. And really from this lifetime of experience and relationships, he's developed deep wisdom as to what's real, what's hype when it comes to banking and financial industry disruption brought on by some technology changes, and I'm really excited to have him share some of his wisdom. So I'm going to dig right in. So 30,000 feet, Aravinda, kind of big picture. When you think of the time that you've invested in meeting and visiting and working with commercial banking executives all around the world, what are some of the changes that have surprised you the most? Technologically, global business, some of the things, the themes that have really have opened your eyes perhaps to how the world has changed since the founding of KAL 25 years ago.
Thank you, Jay, for that very nice introduction. So I think a lot has happened over the last 25 years, and I think one of the surprises is how some things change so little and other things change so much. So the unfortunate thing, I guess, about our ATM industry is that it's been a little slow to change, and some people will probably say that ATMs are not that different over the 25 years. On the other hand, ATMs are beginning to change quite a lot. I think just now it's probably at the quickest pace of change that I've seen in a very, very long time. And I think one of the reasons for that is that the ATM is having to play in a multi-channel, omni-channel world. There is a lot of conversation about how the channels work together. There is a lot of change that is related to the way in which people want to interact with ATMs, things like remote teller-assisted transactions, those kinds of things like video coming in, people being much more comfortable about a video connection and being able to talk to tellers, for example, with video. I think a huge amount is changing. And some of that is because, consumers might have been a little bit slow to utilize some of this technology, perhaps say 10 years ago. There's no reason why we couldn't have done some of the things that are exciting people today 10 years ago. There's no reason why we couldn't have done video teller 10 years ago because the technology was able to do that. On the other hand, I think to some extent people weren't really ready for that because they hadn't done a Skype call or a Apple video call and so on. I think the world has moved on so much. Consumers are ready to do things in a self-service way much, much more than perhaps 10 years ago, and certainly much more than, say, 25 years ago. So I think the rate of change of the ATM business, but also those related to ATMs, but also, if you think about banking channels, omni-channel, and the way that customers want to interact with the bank, I think is changing faster today than it has ever done, in what I have seen in 25 years.
Really interesting. And I come back down to that ATMs are very, they're central. All of us have the experience, of getting cash from an ATM machine, and so it's fundamental as part of the banking value system. Banks have moved more and more to have away from the branch experience where so many of us only interact with our banks via electronic means, and via an ATM is central to that. So I guess let's talk about that. In the future delivery of financial transactions, what do you see the role of the ATM and other types of self-service machines being, and why? How do you see it evolving?
So that's a very interesting topic because you said, ATMs and cash and so on. So I think there's a perception that ATMs are about cash dispensing, but this is not really the correct definition, I think, of an ATM. True, it dispenses cash. It is the core transaction, the most important transaction of an ATM even today. However, what the ATM is a publicly available machine on which you can do transactions. So from that perspective, compare, say, a phone with an ATM. Now, what the ATM can do is pretty much everything that a phone could do for the customer from a transaction perspective, but it can also do some extra stuff that a phone can never do. So it can dispense cash, it can accept a deposit, it can accept a check deposit. Now, of course, those three things differentiate an ATM quite a lot from a phone, but it's not only that, right? Let me touch on something that differentiates the ATM dramatically from, say, a phone. It can always be more secure than a phone can ever be, and the reason is that the ATM is something that a bank controls completely. it is able to secure it completely, while a phone or the home PC is something where, as you probably know, there's a war going on, right, between the good guys and the bad guys, right? And the bank can never secure your home PC or your home or your personal phone in the same way that it can secure the ATM. Now, one of the things that I'm seeing is, when I meet people kind of in social, outside of work, they'll often say to me, how secure is it for me to do a transaction on a phone? How secure is it for me to do a transaction on my home PC compared with how secure is it for me to do that on an ATM? And you know what? You can pretty much secure that ATM to, if you like, any level that the bank wishes to secure it to. While you can't say that ever about a phone or a PC that is at home, because it's not owned by the bank, right? The bank can do lots of good things about that. So my forecast is that as we go into the future, the war, the malware war, is going to continue. It's not going to be won. It's not going to be decisively won in the next 5 years, or perhaps not even in the next 20 years. That malware war is going to continue, and home PCs and mobile phones are continuing to be a risk from a security perspective. The ATM can always be secured to as the level that the bank would like to secure it, without any external conditions on how secure it can be. Now, I'm not saying it's 100.0% secure, because of course, if you don't do the right things, then it's not secure, but you can always do a list of the right things to make it incredibly secure. So I think, that's a big
This
upside.
is a great topic, the security and cash. And
right.
I love this topic, Aravinda, because I think it goes against the conventional wisdom, the death of cash. And I know that you shared some statistics about how that, in fact, is not true. There's more cash being used than ever before. Maybe you can share that with the audience and why that's happening.
Well, that's quite amazing, right? If you look at, death of cash, I think is completely exaggerated, as you know, and it's not imminent, and it will be there when we've got the paperless office. So that's not happened quite yet as well. But cash is much bigger in our lives than paper is, if you like, from an office perspective. So a couple of things about cash. In Europe, where there is less cash, if you like, than in most other large economies, the amount of cash in circulation doubled in the last 10 years. In the United States, the amount of cash in circulation increased even more than in Europe. And in Asia, it is increasing much faster than that. In China and India and so on, it's increasing much faster, partly because those economies are growing faster. So cash is not about to go away in a hurry. And if you look at the numbers, for instance, for Europe, about 75% of all transactions are done using cash today. And that's because a lot of tiny transactions get done. So obviously, if you do it by value, it's a little different, because, you don't buy a house with cash. But of course, that's just one transaction, right? So if you count from a transactions perspective, then about 75% of transactions still are done using cash. So it's not going to go away in a hurry. But if you're looking forward to 100 years, I don't know what's going to happen in 100 years. It could well be that there is no cash at that point. But the death of cash is not imminent. Jay, I think you're muted. I can't hear you.
Yes. I was responding to a question that came in over chat that would be good to work in here. So there's cash, and then there's this world of mobile payments, smartphones, the interaction in commercial banking transactions with the phone, and certainly in some places where there's a kind of where perhaps the commercial banking systems aren't as well developed, in some places in the developing world where there's this leap from traditional systems right to mobile payments via text, different forms of smartphone applications. Where's that going? You work with some of the biggest banks in the world, the banks that control a very significant portion of the world's financial assets. All of that disruption, what are you seeing? What are some of the things that are real, and where are some of the things that are hype?
Very interesting question, Jay, because obviously the question is, is the mobile phone going to take over everything, right? And you also hear from banks that there's a mobile-first strategy. I don't know that every bank thinks that way, but a lot of banks think that it should be a mobile-first strategy, and I think that makes sense. But also, let's talk a little bit about, when we talk about a mobile-first strategy, do we mean that everything's done on the mobile phone? No, it isn't, because you can't get cash from a mobile phone. But the three channels that are most important to high-value customers of a bank are the internet, the mobile phone, and the ATM, right? Those three channels work together. If you say, let's look at high-value customers, where do they go? They basically go to those three channels. They don't go to the branch, and they don't use other methods of interaction like, I don't know, voice and so on. So those are the three big channels. Now, if you ask the question, if banks have a mobile-first strategy, are they totally insulated from the risks that are around the corner? Well, I don't think so, because here's the really interesting thing. I was at a live seminar this week, and I think I can quote this because it was a public seminar by Gartner, and here's a really surprising statistic for you. Gartner are predicting that in 3 years' time, 20% of today's mobile applications will be made redundant, will be what's the word? They said will be discontinued, because they think that it will be abandoned. Abandoned is the word they use. They said 20% of mobile apps will be abandoned in 3 years' time. Now, here's the thing, right? The point that I think Gartner made there was not that we should, we're not going to use our phones in 3 years' time. It is that it is an omni-channel world, and the channels are, of course, competing, and people use multiple channels. It's never one channel, but that this thing is changing so fast. It is a mobile-first world, perhaps in terms of the way banks should invest today, but be aware that the relationship between channels is changing so much that in 3 years' time and 10 years' time, customers may not necessarily think of the way they want to interact with banks as a mobile-first world, right? Now, don't ask me, what will be the most important channel in 10 years' time, because I really don't know. However, I'm pretty confident that ATMs will remain a crucial part of an omnichannel world, if only because it's the only way that you can deliver cash, and I think cash is still going to be super important 10 years' time, if only because the channels that are owned by the bank, i.e. ATMs and kiosks, can be super secure today, and they can be super secure in 10 years' time, even though malware is going to be much smarter in 10 years' time. And again, I don't know, what the bad guys are going to do in 10 years' time, and nobody knows the answer to that. But you know that if you're controlling the end device, you can always be one step ahead of the bad guys, right? You know that. While you never know that if you are delivering transactions to a customer-controlled device. So I think my summary of that, Jay, is that it's mobile first today from an investment perspective for banks, makes sense. It may not be in 10 years' time. The forward-looking banks are probably going to kind of see that in 2-3 years' time. Gartner already predicting that change has started now, and ATMs will be part of an omni-channel world in 10 years' time.
I love that, Aravind, and that ties into a question that's come in, and it relates specifically to the world of ATMs, kind of prompted by the audience here in terms of the merger of Diebold and Wincor, and the specific challenge that relates to your business in terms of interoperability, bringing in new systems into legacy environments, multinational footprints of technology, of ATM machines and other technology within the bank. So when you think of that kind of that IT spend and the IT decisions of big organizations in general, and then the commercial banks you work with, what are some of the how should decision makers think about preserving their flexibility, protecting their budgets while getting that next new thing out to their customers? What are some of the kind of the conversations you have on that topic with some of the IT folks you speak with at banks.
Right. So Jay, you mentioned several hot buttons there, right? Interoperability, what's happening with mergers today and so on, and how do banks see this stuff? Okay, I think the first thing is this, right? When banks, especially large banks, when they invest in something big like the ATM network or their network infrastructure, it's for sure that they're not going to buy everything from one vendor. So you're not going to have a network, for instance, where every router, every switch, every server, every piece of your hardware come from, say, Cisco. I'm sure Cisco would love to do that, but you're not going to be Citibank and have only Cisco for everything across your network. So I think that applies to ATMs as well. If you are a giant bank and you have lots of machine ATMs around the world, you're not going to have one brand for all of your systems. Now, if you're going to have multiple brands of, for example, hardware, and then you have solutions that are very sophisticated that needs a lot of moving parts that you might buy, for example, your video system from video supplier and so on, and you're talking about best of breed. In other words, you want the best video system, you want the best comms, you want the best routers, you want the best firewalls, you want the best software inside the ATM, you want the best biometric system. Then it's not all going to be made by one company. In other words, you got multiple companies in that big basket, right? Now, if you have multiple companies, you need interoperability. You need to know that your biometric system is going to work with your ATM hardware, is going to work with your ATM software, all those kinds of things. So you need these things to work together. You need the best of breed of components. And of course, if you want these things to work together, then you need standards, right? So the great thing is that the world has a lot of standards, sometimes competing standards, which is not necessarily that helpful, but sometimes just one standard. So, for example, when it comes to ATMs, there's a standard called XFS, right? Fantastic. When it comes to networking stuff, there used to be a lot of standards, but TCP/IP has won the battle, right? So today, pretty much everybody talks TCP/IP, and then that doesn't solve all of your communication problems because you need some other pieces as well. How do you talk to the back end? What messaging do you do? How do you do security and so on? So, I think the good thing is that there are lots of very interesting standards that play in the ATM environment. So I think from a bank perspective, you need to make sure that you understand which standards matter. You need to kind of drive your vendors to be standards compliant. Some of them don't want to do that because they like to play proprietary a little bit. So you need to be a little careful about that because you know what? You're just never going to buy a whole set of, you're not going to spend $10 billion on some kind of massive global thing and buy all of that from a single vendor, right? It's if only because the vendor can't do it anyway. There is no vendor that can provide you absolutely everything that a bank would like from an IT perspective. So then you need those vendors to be interoperable and work together, cooperate where necessary, and obviously compete where necessary too.
Aravinda, let me ask a follow-up question to that, which is this. It's a four-letter word, implementation. Okay, so you've got some battle scars. Okay, I'm sure you've done some big tech projects and transformations for some of your commercial banking customers that have gone incredibly well, and some that have hit some significant roadblocks and bumps. So, what are some of the lessons there? Okay, you make the decision. You're gonna try to go to that next gen system. You hire a vendor, and you hire consultants. You get the team organized. What are some of the wisdoms that separate the successful implementation from the ones that have challenges?
Right. An interesting question. So implementation, I think the first thing is not to underestimate implementation, right? So if you say if the bank says, we want to kind of convert our ATM software, and then, please start tomorrow morning, and when you finish, give me a call, right? Then there's a lot of risk because A, it is complicated, B, you need to be deeply involved in that implementation process. So it's not, like, say, for example, ordering a new car and buying it because you'd say, well, I choose my car and then I expect Volkswagen to deliver me a car that is complete. Because what's the big difference between buying a new Volkswagen and implementing a new ATM software solution is that the Volkswagen is a standard commodity thing, and if you buy a piece of commodity, you expect it to work day one and you expect it to be perfect. But when it comes to ATM software, banks don't buy commodity. And banks have never bought commodity. They always want it to be configured and customized to exactly how they want it. And the big banks have a very complex set of requirements saying, do that, do that, do that, do that, because we are bank X, and here are the things we'd like you to do, right? So now when you talk about something very customized, which is true with almost every ATM software project and true with every ATM network as well, when you kind of talk about something that's very customized, then like you said, Jay, there are going to be implementation challenges. But most importantly, I think, if we're talking about what the bank should do, bank needs to be deeply involved in that conversation, right? Talk about every single piece. It's a little bit like when you build a house and you're working with the builder and you're kind of building a new house. You don't kind of say, let me know when you finish building the house. You want to know about the taps and you want to know where the curtains are, and it just so happens I'm in the middle of extending my house, and my goodness, a number of questions that the builder asks, and you need to engage with the builder to make sure that you're happy with everything, right? Otherwise, what happens is that you're bound to have a room, that is totally different from what you expected, and it's pink when you expected blue, and so on. And those are the things, right? You need to be deeply involved from a bank perspective in the implementation, understand the detail, take part in the decision-making process, and then I think to the extent that the vendor and the banks and I should say multiple vendors, they all work together very closely. Then I think that's the that's the one answer to all the problems. Just work very closely with all of the vendors.
Okay, so that's a segue into you as an entrepreneur, as a business leader, and as a service provider. So you have an organization that installations all around the world, people all around the world. As a service provider, as a vendor, what are some of the components of the culture that you try to instill within KAL to be as effective as possible with your customers, many that are many hundreds of times larger than your firm, some of the biggest organizations in the world with hundreds of thousands of employees? How do you think about your culture so that it can be as effective as possible with these implementations and with some of the getting your customers where they want to go in terms of those next-gen technologies?
Right. So I think, one of the differences between, say, a customer bank and us could be the size difference, like you said. But also, Jay, you mentioned earlier that we work around the world. And of course, there are significant differences about the language that people speak, the culture of the local culture of the country and the way they do projects and so on. And all these things are so hugely different. But one of the things that really surprises me as I travel around the world, Jay, and you kind of mentioned that I've traveled quite a lot, is not how different people are, but once you've seen all those differences, how similar we all are. Actually, I think that's the biggest surprise, because sure there are these differences, but there is overarching similarity about us basically at the end of the day, being all of us being human beings, right? But there are these amazing similarities. And sometimes, you go to a country and they'll say, oh, we are totally different because we are Australian. No, we're totally different because we are Thai. There's the rest of the world and there's us. But you know what? Once you kind of dig under that surface, you see, 85% of it is, just like everybody else, right? So in managing these projects, right, the challenge is then about communication. Again, it comes down to working really closely with the customers, as we said about the integration success earlier. And then from that perspective, the language, right? The language and all of that related around language is crucial. So if we go to China, where, as you know, we've delivered lots of projects, and we kind of say, look, we're going to speak in English, and when you're ready to speak in English, we'll run the project. That's never going to work, right? So we always have local folk on our project teams. We can do everything in local language, because I think that's all very, very important. And it's about that integration success thing that I talked about. It is about amazing communication, right? And you've got to be able to speak in the right language. And what's the right language? It's a customer's language. At the end of the day, the right language is the customer's language. It's not English, it's not French, it's not German, it's not Japanese, because at the end of the day, if you're talking to the customer is king, and it's his language that makes him most comfortable, right? So that's what we try to do.
I love that. I want to drill down a little bit further on that. When things go wrong, when things go wrong, when we're behind schedule, when we're over budget, just those conversations. How do you talk to your team about handling those conversations in a customer's king manner, for sure, but also in a manner that you're running a business and that be respectful of the value you're providing? What are some of the kind of leadership guidelines that you try to share with your team in those things go wrong situations?
Well, when things go wrong, we need to make sure that we are very clear, direct, and honest about why things are wrong. And it's very rare that the root cause is only on one side, because usually there are multiple causes for things going wrong. And it could be us, it could be other vendors, but it could be also the bank. And in these kinds of things, like I was saying, there are multiple parties that have to deliver, in order for the project to be successful. So from that perspective, it's exceedingly important that you understand what the issues are and you communicate those issues to all the people who are involved. So I think, because sometimes I think people have a initial knee-jerk reaction of trying to maybe protect themselves by not perhaps being fully open, then I think that's always counterproductive, never going to get you anywhere. So you do need to be exceedingly open about where the problems are, because you know what, if there are 10 issues on the Cal side, there are probably 5 issues on the bank side and another 3 issues on somebody else's side. So if you're going to kind of pretend that there are no issues on the Cal side, you're just never going to get anywhere with the other 8 issues, right? So be open, be willing to drill down into the detail, be willing to accept responsibility when you made a mistake, but also when it is somebody else's responsibility, be willing to be very clear about it and make sure that those folk take ownership to fix those issues.
Okay, this is a talk. We primarily have U.S. executives on this call. A lot of U.S. banking executives in IT or with commercial responsibilities, and maybe talk about you have a perspective of banking in Europe, the banking environment in Europe and China, really all around the world, and what are some of the areas in perhaps where the U.S. system is lagging, and that where some of the areas where there could be some lessons learned in terms of some of the innovations and the approaches in other parts of the world. Sorry to put you on the spot with that question.
No, thank you for the question. So I think one of the interesting things is how different ATM transactions are around the world. There are probably 100 different transactions. If you put all the transaction types of the whole world into one bucket, we're talking about 100, maybe 150 different transactions that are in that bucket. But then when you go to particular countries, you see maybe some countries have only 5 or 6 that are implemented. UK, where I live, it's just the top 6 transactions that are common on the ATMs. While if you go to some other countries, you see that maybe they do have 5 or 6, but it's like a different 5 or 6. Or go to some other countries still, and they have 100 different transactions on the ATMs, right? And one of the very interesting things I find is that people will say things like, oh, that'll never work in my country. It's going back to that previous conversation about how there's an assumption that people are super different. and that transaction would never work. Now, I don't think that's right. I think that something that will work in other parts of the world will work, in those countries, in your country as well. So let's talk about the United States and what's missing in my mind about US ATMs. One of the really big successful bits of technology in ATMs that comes, if you like, from Japan and Asia is called recycling. So recycling is about an ATM that can dispense cash but can also deposit cash, that allows you to deposit. Now, both the US and Europe have been a little slow to adopt recycling ATMs. Japan pretty much invented recycling. They've been recycling for 25 years or longer. China is a particularly interesting example because we do a lot of business in China. And in China, one of the things that they do, and I think we can learn from this, they do a business case for each location as to whether it makes sense to have recycling or cash dispensing only ATM, right? Dispense only or recycling. And one of the reasons to make that judgment is that a recycling ATM is more expensive than a than a dispense ATM only. So what they do is do a business case, location by location. And here's the really interesting thing, okay? If you look at the Japanese situation, 100% of ATMs are recycling. Not necessarily because there's a business case in every location, but it's just what Japan does, right? But China said, you know what, we're going to do a business case. 5 years ago, on the CAL ATMs running in China, 40% of ATMs were recycling. Today, 60% of ATMs are recycling. So why is that number interesting? My feeling is that if US banks looked at the business case location by location, they will think that, I think they will find that 20, 30, 40% of ATMs should be recycling, and there's a business case for recycling. So I think, that's one of the things that I think the US could do. My feeling is that if recycling became pervasive in the US, I think you'll probably find that, in fact, in 10 years' time, 50, 60% of locations might become recycling.
So that's a great jump off right there, the idea of the business case and the analytics. So the decision making based on some of the advanced analytics that a firm like yours can empower your customers with in terms of what their customers are doing, when they're doing it, why they're doing it. Maybe just talk about some of the progress there in terms of data mining, understanding the data in terms of time, size of transaction, demographic, and those types of customer information points that can really drive the bottom line, improve customer satisfaction.
So the ATM collects lots of information, right? Lots of data, how the customer interacts with it, and so on. And today, not very many banks use that information to make judgments about how the customer interacts with the ATM and so on. Not very many of them do that. But of course, it is possible, right? Because there's so much data. So a couple of things. One is, of course, you want to data mine the ATM transactions in order to understand whether customers are interacting with the ATM in an optimal fashion. So, for example, if you discover that on a particular screen, everybody takes much longer than at other screens to make to choose the button they want to press, maybe there's something wrong with the way that that screen is working. So that's part of it. The other part of it is, of course, about the kind of transactions people do. So you could do a lot of analytics around the way people do transactions. And then the third part of it is about potentially personalizing the ATM experience, because you can easily do that on a per customer basis, personalize that experience. And along with that, and this is one of the things that the United States leads and the rest of the world lags, personalization and marketing and advertising to that ATM, right? And doing one-to-one to the customer. The US leads that. And the rest of the world is kind of still talking about it and lags behind what you guys are doing in the US. So I think personalizing the customer experience, doing marketing and advertising around that, doing the analytics around that, I think huge opportunity to
that personalization. I think that's we're running a little bit up against time here, but I do want to get into this a bit because it ties into just this whole experience here and things that are going on this device. You know, I enjoy my Los Angeles traffic commute with my Waze, and I'm getting pinged constantly as I'm going along with local offers that are geo-specific to me. So obviously, the phone, the ATM machine, the bank branch, it feels like that's an area of a lot of it, whether it's a savings offer, an investment offer, there's a lot there that could really create some marginal in an industry that's tough to grow in, right? It's tough to grow. How much of that you think is real in terms of location, the phone, the ATM machine, the bank, and that interaction? How much of that is happening? What are maybe some innovations that you get excited about?
Well, that's a huge opportunity, right, Jay? Because when a customer is at the ATM, you know so much about that customer at that very moment. Yeah, he or she puts the card in, enters the PIN. You know who they are, and not only do you know who they are, you have access at that very moment that he enters the PIN and identifies himself, everything about his financial history, right? So isn't that a brilliant moment to ask the right kind of question, right? Because about things like loans and mortgages and so on, right, around that. And if you consider that most of the profits of a bank come from loans, right? I mean, that's where banks make money, right? At the end of the day, that's more important than anything else. Then being able to do that smartly at an ATM when you know who the customer exactly is and you know all about his or her finances at that very moment, you know, huge opportunity, right? Huge opportunity. So I think banks are beginning to do exactly that. They're beginning to kind of understand that opportunity. They're beginning to understand that delivering loans in a customized, smart way at a time when maybe you know, you got the customer's complete focus, right, just for 30 seconds, and you know, there is no better time to ask a simple, quick question and maybe deliver a microloan at that very moment.
Okay, I want to take a little, kind of a 30,000-foot step back question as we're kind of coming to a wrap here. So, you know, we look at clients. You know, when you're working with clients, I mean, you have a lot of these clients that are the, you know, again, the Citibank, Unicredit, just, you know, some very, very large organizations. And when you think of that moment when they say to you, hey, let's work together, and then there are other situations where you've gotten to that place of many cycles of discussion with prospective customers, and it just doesn't work out. Any points that you could make to, you know, if there are, you know, technology entrepreneurs here on the line, that when you're working with customers much larger than yourself, you know, what are some of the themes that allow you to be successful in securing them as a customer, and what are some of the areas to some pitfalls to avoid?
You know, that's you know, when you say that customers are, you know, big banks are much larger than us, I think that's true. You know, if you just look at the size of the bank. However, when you kind of interact with them, you discover that you know, they are human to their human size, right? Yeah. And the ATM group, for example, is not 10 billion people. You know, it's human size. And you know what? We know everybody that is in the ATM group that we work with at every customer, because you can know everybody. So I think sure, that group has a giant organization behind them, but at the end of the day, I think you know, there's that little tip of the iceberg that you work. So I think my perspective is that it all kind of boils down to a human size in that discussion.
Okay, I'm going to open it up here. We have a couple questions in from the audience. I'm going to see if I can actually unmute a couple of folks so they can ask you directly, Aravinda, if that's okay.
Sure.
Okay, great. Let's see if I can. Hopefully this will work. Mr. Everard, are you? Are you there? You had a question here. I asked a piece of it, but about the merger in the industry. You want to ask that question directly to Aravinda? Michael?
Sure. Thank you, Jay. Just in order to, if you see any new opportunities, as you have a global perspective in terms of what you're seeing in terms of changes due to the merger of these two big companies, Diebold and Winkler. What are you seeing? Probably they are still working on the just final steps on that merger. But do you see anything that's been interesting for you or for the business?
I think I think the competitive landscape is changing a little bit because of that merger. It depends to some extent country by country. So maybe you guys have seen that in the UK authority kind of blocked the merger this morning, in fact, because they think that the number of competitors in the hardware arena going from 3 to 2 isn't such a good thing. But that dynamic is not true necessarily in every country. So if you look at countries like Italy, for example, there are more players there. If you look at the United States, it's a little bit kind of maybe 3 to 2 to some extent as well. So I think it depends where. But my sense of it is that countries where the number of credible ATM hardware providers has gone from 3 to 2, there's some level of concern amongst banks that choice has been reduced. On the other hand, in some other countries, like in Italy, I don't think, or in France, I don't think the amount of choice has gone down that much because there are other players in those markets. So I think, Michael, my thought process there is that it is an opportunity for some of the other manufacturers to present themselves in those markets where I think there is a thirst and a hunger that there should be at least 3 strong hardware vendors in each market, or maybe 4. And I think there is a thirst for that. So I think it creates opportunities for some of the other companies, because globally there are about 40 ATM manufacturers, and we have relationships with all of them. And if you look at it globally, there, some of them just operate only in a region. And I think what will happen with the consolidation is that some of those companies that perhaps restricted themselves to one part of the world will now say, hey, you know what, I think there are some other countries that we can now play in.
Great. Thank you, Michael, for that question. I'm going to see if I can unmute. We talked about a little bit of this, David, but let me see if Mr. Rodriguez, if we can unmute you here, and maybe you can ask your question about mobile directly to Aravinda. David, are you there? Sometimes this unmuting does not work. Let's see.
No.
Mr. Rodriguez? Oh, there you are. Okay, fire away. You kind of have 2. I think you're muted, David. I think you can unmute it from your end. Okay, a little bit of technical challenge there, but basically, the question, Aravinda, was about what KAL is working on, anything on the mobile side that you can share with the group.
Right. So I think we are certainly working with mobile integration. So I think we talked a little bit about omnichannel and so on. So the ability for a customer to start a transaction on the mobile channel, finish it on the ATM channel, we support that already, and that is of course something that is very crucial. If the question is whether CAL's kind of going to do mobile applications and so on, especially consumer applications, that's not really where our focus is, and there are companies better than us working in that area. So our focus is ATM, but also making ATM and kiosk, I should say. So everything self-service. So when we use the word ATM, we mean it in a very broad sense, including machines that are used, for instance, in shopping malls where multiple different shops deposit cash into these kind of self-service style machines. So you might say, well, that's not very ATM. But for us, ATM is anything that is a self-service machine that interacts with with people, right? And that's able to do a transaction without any kind of manual intervention. So so that's kiosks and ATMs and remote teller-assisted transactions, all that kinds of thing. So, but where such devices interact with mobile phones, then we work with that as well, but really keeping ourselves to that self-service side.
Great. One more question, and then we'll kind of move to wraps. I know it's late for Aravinda. It's just noon here in LA, but it's late for him in Scotland. So question is from I don't think I can unmute you, Charles. It has to do with kind of any thoughts on artificial intelligence and robo-teller assistance at ATMs. Anything, any thoughts there to share with the audience?
Interesting. You know, artificial intelligence is a big conversation these days in the news, and you see it everywhere. Well, it just so happens that I know a little bit about this because really a very long time ago, I did a PhD in artificial intelligence, Jay.
There you go.
And, but there's a reason why that was a very long time ago, because you know I was a little disappointed with where AI technology was. Okay, you know, this was 25 years ago before Cal started, and you know, it just seemed like there was a very long way for AI to go. Now, again, I'm talking about 25 years ago. Now, has AI technology moved by leaps and bounds since 25 years ago? Strangely enough, I don't think it has. What we are able to do in the AI community, and I'm not part of it, but what the AI community is able to do is to run those things much faster. You know, 100 times, 1,000 times, 10,000 times faster than you know I was able to do with my PhD technology in you know in 1989. Now, of course, to some extent, the answer to intelligence is being able to do something faster, because it doesn't really matter how smart you are. If it takes you 1,000 years to come up with the answer, that's not going to be seen as smart. However, we also, all of us, have a sense of what intelligence truly is, right? So we know that human beings are intelligent. We also know that you know, Apple Siri is not that intelligent, and maybe it will be one day, but we know it's not really that intelligent. So are we at a point at which true AI is available? No. But are we at a point where AI algorithms and technology can add value to business transactions? Then absolutely yes, right? Because there's a lot of cool stuff that pretty smart apps can do for us today. I mean, if you take something real simple that only humans can do very well, like translating, right? Still today, great translations can only be done by humans, but I use Google Translate all the time, right? Because it is good enough. So I think the answer is good enough AI is here. We can do stuff. It's never going to take Jay Turo's job away, I don't think. It's not going to happen in 10 years, not going to happen, I don't think, even in 50 years. So we shall see. You know, that may be a dangerous prediction to say 50 years, but it's not going to be in 10 years' time.
Great. Well, I'm going to kind of have I always love ending these innovation series chats with the Nostradamus question, and I'd like to put the 10 years.
I've done that already.
No, 10 years, 50 years. I'm not letting you get away with that, Aravinda. April 2018, a year from today. Thoughts on the kind of technology areas that commercial banks will be focused on, most concerned, excited about, new features, interoperability, cybersecurity. As we move into 2018, what are some of the things that the banking executives should be looking at now as being impactful to them?
Well, you know, 2018, I think they're going to start thinking about Windows 10, unfortunately. It's a little bit mundane because the Windows 7 is going to come to an end. They're going to see the Windows 10 migration as beginning to be important. So don't want to talk too much about that because that's not so exciting, right? However, I think some other things we talked about, things like omnichannel, things like remote teller-assisted transactions, things like perhaps mobile first not necessarily being the be-all and end-all, right? Because perhaps, you know, mobile is beginning to become less important than it is today. Rethinking where, you know, the costs are, cost reduction stuff, and how that plays with an evolving omni-channel world. I think, you know, I think that's where the focus will be next year.
Well, that's a lot of great stuff here. It's a great point to wrap it. Let you get home to your family and to dinner, Aravinda. So, listen, I really want to thank you on behalf of the audience and for all of your passion and sharing your wisdoms with us. I want to thank our audience for being here today. and I hope that it was as enjoyable and as informative for you as it was for me. So, Aravinda, thank you so much. That was great. We got to do this again.
Thank you.
Maybe
Jay.
April 2018, we'll do it again.
Oh, don't ask me.
See if these predictions came true.
Please forget my forecast.
Yes. Thanks, everybody. Aravinda, thank you. And after the webinar, folks, you'll be getting both a link to the recording of the talk. If you'd like to forward that to a colleague, feel free to do so. It's also a short survey, just one question, any feedback that you have in terms of the webinar format. And on that feedback form, if you'd like to get connected with someone from KAL with Aravinda, send it over, and we can certainly pass it along. So, Aravinda, thank you so much, and you enjoy your evening, and you certainly deserve a break. You've been on the road, I know, so I appreciate you staying up late to do this with us. So, thank you.
Thank you very much, Jay. Thank you. Bye.
All right, be good. Bye-bye.